What's good, everybody? Today is July 10th, 2025. I just want to quickly run through the price action from today. We saw some super interesting setups today. There was one really great market open trade and then one that I ended up taking later in the day that didn't end up playing out. So today we'll just quickly run through why this first trade worked out, why the second didn't work out. We'll quickly run through some conditions and some healthy ways to position ourselves to take more wins and less losses. So without further ado, let's go, baby. All right, so just quickly clear up the charts and go over what we were looking at going into open and going into this whole entire day, right? So as I'm telling you guys every single day, we need to set up our weekly objective, right? So this week it ended up working out perfectly. This was the target for the entire week. As we see, it's this high right here. It's previous weekly high. Quickly place that on the chart. We saw yesterday on NQ, we took that and ES didn't, so we created a bearish SMT there. And right now, we need to watch like what we actually want to do, because looking at where market opened, we have a super indecisive spot where the market can do really whatever it wants to do. We opened the market right here, I believe, right on this candle. So on this candle, we're sweeping this high. On NQ or on ES, we're not taking that high. And what the market wants to do at this exact point, like remove the side here, you really cannot tell if you want to push higher or push lower, because we have generated liquidity on the bottom, we have generated liquidity on top. Like really, we could do whatever the market chooses that it wants to do, right? So what we do is we just simply wait. What does open want to show us? We open the market at 9:30 and we immediately end up holding this SMT that we put in place. So NQ takes this high, ES doesn't. So right now what we've just done is we've put in two SMTs. Actually, we've put in three SMTs right here. A second SMT on this high, and then a third SMT with this high and the high all the way over here. So we have a crazy amount of SMTs in the market, giving us a ton of bearish pressure, right? So right now, market open, we just want to wait, because if we want to take a long, we need manipulation to the downside first before we can go long. If we want to take a short, we just need the opposite, manipulation at the highs so we can go for shorts, right? Very simple stuff. On open, what we see is NQ comes and pushes this high as well. Important to note where our generated liquidity is lying. We have these equal lows right here. We have generated liquidity down here, with this being a low during London session, and then we have London session low chilling right about here. So I expect to see that if we want to go for longs, we'd either take out some small lows and then move, or we take out big session low before we continue to session high, right? So on market open, we come up, we make this SMT, and NQ had this huge amount of bearish pressure, right? You could have traded this, but for me, the trade here would have been after this first candle and that first fair value gap gets entered. I would take first presented fair value gap, most likely with a trade like this, and probably be taking that to these lows and then leaving runners, right? But once again, look at this R and then tell me if this is really something that ends up like you want to take. And then as well, understand that we didn't even get tapped here, so there was no trade. So if you didn't get entered down here, don't be mad because there was no trade. However, ES didn't have this pressure, but in my opinion, it was still super clean, because if we look right here, this is the perfect market maker buy and sell model that we've been looking and training ourselves to spot over the past months, weeks, and if you've been watching these videos, days, right? So this is the perfect market maker model, right? We have manipulation at the highs, we have an SMT. What we want to see is that change in the state with displacement, making an inverse fair value gap. Our inverse fair value gap would be right here. Right here. And then also one thing to note is that right at 9:31, we end up putting in our first presented fair value gap, which now, as we know, this has an extra, it's really just the easiest way to think about it is a fair value gap that has extra weight, and during the day, it ends up becoming a magnet for price to come and pull back towards. So our first presented fair value gap, what we end up seeing is we see displacement, we see a further push. Now this is where you could have got your first entry, and the trade for me here would have been right at this point with a stop probably above this candle high. So in my opinion, this trade would have worked out. I mean, it's exactly what we want to see. We have equal lows, three equal lows resting, and we have a reason for price to push lower. However, at this moment, we had SMT play out, right? We were 9:33. By this point right here, we have an SMT playing out. So it's up to you if you still had confidence. For me, I just consider this a six sister instead of a SMT, because I was not expecting the market to immediately manipulate back higher like it did, right? And because of that, I still validated this trade as a potential short. I thought this was great. So we know that when we come back up and sweep this internal high, this is now considered turtle soup. The market really shouldn't pull any higher than this if it wants to go. So as well, we have turtle soup aligned with that first for value gap. And if we look on ES as well, we had an SMT play out right here. Just making this model just beautiful in my opinion. First presented for value gap, pull back into, we had our high right here, 948, comparing this to 939. So let's pull that up on here. 939 high right here compared to 948. We had a huge easy SMT. Now the way I like to see this is that if I'm going to be taking this turtle soup entry or I'm going to re-enter here, I'm now going to look to pyramid into my position, right? So that means I'm going to add an extra position on top, maybe decrease my risk and most likely increase my reward, or else there's really no point in doing it. So what I would have seen here is 15 second wasn't really the cleanest in my opinion. However, 30 second gave some good opportunity. What I was looking to see is after that turtle soup and that sweep and that pull higher, we just want to enter on that change of the state, place our limit order there, see what ends up happening. So your trade would have been right here. Stop at this high, and then we go for this. We'd have got a nice clean 2R, and if we pyramided into this trade, we would have had 2.86 plus 2. I mean, this is extra trade, and we got extra confirmation. We decreased our risk. We did a lot of great things on that pyramid. But either way, I thought this was a pretty good trade. It was a very textbook model. This would be your trade right here, just so you guys can take a look at it. Next trade, the one I ended up taking was good. It had some thesis to it, but there was also an issue, which we'll go over today, right? So after we see price do this, we were looking to hold this for runners. We didn't end up getting that pull or that push, but what we ended up seeing was this huge discorrelation get put in, where we now have NQ all the way down at these previous day New York lows, with ES not even taking previous London session lows or taking any of these intermediate term lows. So this is immediately not just an SMT, this is now discorrelation, which an SMT is good because it shows us there is manipulation, but discorrelation shows us that the market is not moving correlated, and when the market's not correlated, we cannot expect to see efficient price action, which is the whole thing in which we're here for, to catch market efficient moves, not sit through this consolidation, this back and forth price action. And that's the way we like to trade. So when we see discorrelation, we immediately want to alert ourselves and say, okay, we're now entering discorrelation. There's not a lot of reason for price to start moving efficient, giving us quick moves, giving us good take profit hits. We're likely to see more things get disrespected than we do get respected, right? So exactly what we saw here is on NQ, the easiest way to spot discorrelation is a huge SMT, or if you just compare your biases separately and say, okay, where does NQ want to go? You're most likely going to say NQ wants to move bearish, right? Now look at ES. You're going to say, okay, ES just ran through all these SMTs. I'm now expecting ES to run bullish. If you can say bullish on ES, bearish on NQ, you most likely have a big case of discorrelation, and it's best to just take your hands off the chart and not trade. So I ended up trading this, and I ended up getting bit for that. So I thought that this trade thesis was fully there, and the higher time frame thesis was there. However, the discorrelation and really just the SMT and just the market conditions on a bigger scale was not there, which made the entry model and everything else not work out right. So what we looked at here was this huge fair value gap, right? So we're checking out this fair value gap, and we're also examining on the higher time frame, the 1 hour for me. Where's our change in the state that's gonna lie? Where's our change in the state lying that if we wanted to push bearish, where is it going to lie to show me, okay, now we're looking to move to the downside, right? So now there's two spots you could have marked it. For me, I marked it right here. If you zoom out to a 4 hour, we can look to mark it somewhere right here, and this ends up just becoming an order block, right? So wherever you wanted to mark it, price had to change the state. So what we look to see on the change of state model is, of course, we know we want to pull back to equilibrium or for value gap or the change of the state. If they all align, it's beautiful. In this situation, everything aligns. We have a equilibrium resting here, right within this fair value gap. And then we also have our change of the state line resting here. So we see everything that we really want, right? So what we're doing is we're simply waiting. Market hits this level and immediately reacts off of it. That is a sign of efficiency. And after seeing this big high resistance move on the 1 minute, where we're going up and down constantly, we can expect to see low resistance on the other side of the market. So what we see is we see this 5 minute push, the change of the state, and we end up closing below. So now we have a 5-minute change of the state. We want to see the exact same thing. We want to see a pullback to a fair value gap, equilibrium, change of the state, and then look to scale in and take a 1-minute entry to low hanging fruit and then hold runners for the bigger model, right? So this 5-minute market maker model would have looked something like this. We would want to see this become our sell side. We have a curve here. And this is most likely what we wanted to see play out, right? So what we want to see is simply just the push lower past this, a pull, and then just some efficient price action to push us lower, right? We didn't end up seeing that, and because of that, we got out fast, and there's no problem taking this loss, correct? So zoom into the 1 minute here. We pull back to that fair value gap. We didn't have a, now immediately what I want to see is the same exact thing. Once again, we just scale and do the same thing again, fractal. I want to see a leg get put in, a push, and then a push below that, and then we can look to take that trade. And if you would have followed that rule, you wouldn't have gotten a trade here really at all, maybe over here, but still it's not really the highest, easiest to recognize. So you most likely wouldn't have gotten a trade and you wouldn't have taken a loss, right? So that's good. Follow your rules, know exactly what you want, predefine it, and then don't take it if it doesn't hit it, right? But here instead, I thought this was really good because we inverse 3-minute fair value gaps, 5-minute fair value gaps, and instead I decided to take something that looked, I think it was just like this right here. So I was aiming to take this as my low hanging fruit and then end up taking this as my bigger runner. Maybe runners here or partials down here too. But this is what I ended up taking. Price pulls back, we enter in, we immediately get stopped out. That's fine with me because now I know that if I get stopped out here, the only opportunity for price to move in my favor is the turtle soup of this high, just like we saw earlier in the day, and then a potential push to then give me efficient price action lower. And after I take that trade, my rule is that I'm only going to take 2 trades per model. If I try to take a second trade because I see it and I don't have it work out, then there's no problem and I don't feel bad because I'm only taking 2 trades per model, right? I didn't end up taking the second trade because I didn't like the structure and I just thought we're most likely going to sit in this consolidation range because I thought that after seeing this huge move in the morning, it's more likely to see a slow burn consolidation price action, right? So we ended up not banking on this trade. No problem with that. I thought it still looked great. Only thing we didn't have is a leg put in and a displacement through the leg. I still think that this was a okay loss to take. I don't think it was a great loss to take, but no problem with it. It's just a loss nonetheless. Final thing I want to end this video with is a quick explanation of discorrelation and why it's so bad for us as efficient traders, right? So with efficiency, what we want to see in the market for efficiency is we want to see assets moving in correlation, right? To see efficient price action, we want to see it move fast, right? We need assets to move in correlation. Now, if we get somewhat of a little SMT, right? See, we have something like this, right? This is further fuel for our efficient price action because now this shows me that smart money is in the market. They're manipulating the market because there is liquidity resting here. It shows where liquidity is and it shows market activity. And we still see movement with our SMT. This is a sign of efficiency. We still have efficient price action, right? We're going to a bigger buy side level, say we're coming off of some kind of fair value gap, something like that, right? This is showing us efficiency. There's nothing wrong with this. However, let's draw out a bigger model. Let's say that we have 2 identical models and we see something like this play out. We have our sell side, we have our boom, boom, boom. We have one model moving and looking pretty bullish, right? Looking pretty bullish, right? Next, we have our second model right here, which is moving and it is giving us something like this, where we see this and then we see another push lower and we see kind of this, right? This model right here has disrupted bullish order or bearish order flow, and now we're in bullish order flow. We're starting to respect bullish PD arrays and disrespect bearish ones. However, this model right here has not shown anything like that. This model hasn't just put in a cute SMT and now it's starting to catch up. It's still fully within mass discorrelation. Mass discorrelation, it's still respecting those bearish PD arrays. This is where we can expect to see inefficient price action. We can expect to see this almost as a bullish SMT and less as just a quick little bearish SMT that should propel price higher. When we start to see something like a channel almost play out, we have SMT on both sides of the market, this shows discorrelation and we're likely to get choppy or low probability conditions here. So when we see this, we can then expect the market to just give us bad opportunity and maybe come down, stop us out, maybe hit our target. Once again, we expect the market to give us low probability conditions after seeing discorrelation. The easiest way to spot it is simply just a mass difference in price, like we had today, where one asset is pushing incredibly lower, the other asset barely has a squeak to the downside. This is a huge sign of discorrelation. This huge difference between these two assets is what created our discorrelation today. And because of that, we can expect to see low probability conditions going into the market, and we can expect to see not really the best trade setups off of that. So discorrelation is one thing that I like to use as a filter and say, like, if I see discorrelation, I'm off the charts. There's no problem about it, because that's going to eliminate most of my losses that I get from discorrelation. And instead, it's going to bring me into a higher win rate scenario where I take less trades and I win more. Overall, I hope there was something you guys can learn from today. Discorrelation in these two trade recaps were, in my opinion, something that the market really wanted to teach us about today. And I thought that it was super great to run over and just kind of pique our brains on. So if you guys have any questions, throw them in the comments. If you guys like these trade recaps, just let me know. Have any ideas, anything you want me to cover in the future, any questions you have about any kind of trades I'm taking, any trades that you take, just comment them down below. Hit me up on a DM. It's whatever it is. I'll talk to you guys. Sounds perfect. All right, I'll see you guys later. Have a good one.